Hey friends, so here we are, it's April and many of us have just wrapped up last year's taxes. Whether you've breathed a sigh of relief or let out a scream, I get it. Tax season can feel overwhelming. But let me let you in on a little secret that completely changed my mindset about taxes. And that is tax planning is better than tax paying. Say it with me, tax planning is better than tax paying. Because the best way to keep more of what you earn isn't just making more money, it's being strategic with what you keep. And that means planning ahead, not just reacting every April. So if you're a business owner, an entrepreneur, or just someone who wants to stop giving more money away than you have to, then grab a notebook. Here are 20 powerful strategies I'm using right now to plan ahead to reduce my 2025 tax liability. And maybe you can too. But before we dive in, do me a favor and hit the like and subscribe button so you don't miss any of the money making or money saving tips that we share here in the Mom Boss Circle. Now, who's ready to save some money on taxes? I know that's right. Let's go. One of the most familiar tax deductions is maximizing your retirement savings. If you're a wage earner, that's known as your 401k with your employer. And if you're a business owner, the IRS also allows you to set aside money from your earnings before you pay taxes on it so you can save for retirement as well. You will have to pay taxes on it when you use it during retirement, but it gets to grow for years and years with compounded interest without any taxes on what you put in or the amount that it grows to each year. For business owners who are self-employed, this version of retirement savings for us is called a SEP IRA or a solo 401k. It's how we can put away money for our future and reduce our taxable income right now. Think of it like this. You're hiding that money in a safe place the IRS can't touch until later. Again, this is a great deduction for self-employed people or anyone with a side hustle if you can set up this plan. You can also use an HSA, which is a health savings account. An HSA is another double win. It's tax-free going in and it's tax-free when you spend it on medical related expenses. I use this to cover everything from dentist bills to prescriptions. If you have a high deductible health plan, this is a great way to cover those costs. You can take care of those high deductibles in a tax-advantaged way. Okay, number 3, you can invest in 529 plans for your kids. If you have kids and you're thinking about how you're going to pay for their education expenses, then the 529 plan is a great tax-free vehicle. You can put money into an investment account for your kids' education and it grows, interest grows tax-free. And when it's time to use it for educational purposes, it's tax-free then too. Many states even allow you to deduct and write off the amount that you put into the account. I set up automatic contributions to the 529 plan for my daughter, and it's tax-free growth for her education, and it reduces my taxes now. I highly recommend this for parents and grandparents who want to support their kids and pay for their future educational expenses. Number 4 is reviewing your business expenses. This is where the magic happens. As a business owner, you can write off every reasonable and necessary expense to run your business. It's one of the best parts of being a business owner. You earn the money, then you deduct expenses, then you pay taxes on the lesser amount of earnings. So every quarter, I comb through my subscriptions, my mileage, my meals, the tools that I use to run my business. Once I found $2,000 worth of deductions that I had missed just by reviewing transactions. So if it supports your business, it might be deductible. So don't sleep on reviewing your transactions regularly in detail. Number 5, this is the home office deduction. Yes, it's real. If you work from home and you have a dedicated workspace, then you can deduct part of your rent, your utilities, and a whole lot more. I use this every year and it saves me thousands. Just make sure that your space is only used for work though. You can only write off the percentage of your living space and housing expenses that's used for business expenses. Number 6 is asset depreciation. So let's say that you buy a new computer or camera equipment for your business. You can write it off slowly over time, or you can even use something called Section 179 to deduct it all right now. I did this with my office upgrade and it made a big difference in the tax write-offs that I had that year. Now, number 7 is charitable contributions. So instead of waiting until December, I plan my giving throughout the year. When you give to a nonprofit or a 501c3 organization, that donation could reduce your taxable income and also multiplies the impact that you can make to an organization that's just as important. Now, number 8 is looking at reviewing your available tax credits, and this can lower your actual tax bill. It's like a coupon for your taxes. For example, you can claim the energy efficient home upgrade credit when you install new windows. There are also credits for education, for childcare, and a whole lot more. Talk to your tax professional. Number 9 is adjusting your payroll withholding. Did you ever get a huge refund? That's money you could have been using all year long. When I started getting big refunds because I was smart with my deductions, I adjusted my withholding so I'm not giving the IRS an interest-free loan all year long. You can do the same when your income and your earnings change. Encourage you to take a look at those deductions. Number 10 is regular CPA strategy sessions. This is a non-negotiable for me. I meet with my accountant every quarter to plan ahead. It's not just about filing, it's about saving. One session that we had saved me over $5,000 in unnecessary taxes. Now, that's not all. I know I've given you a lot, but there are 10 additional ways that you can level up your tax saving strategy. So let's dive into those as well. Number 11 is employing your kids. If you own a business, you can hire your kids to do real work and pay them a wage. Their income is taxed at a much lower rate, maybe even not at all if they don't make above a certain amount, and you teach them responsibility. My daughter helps with social media posts and some admin tasks, and yes, my business pays her. Number 12 is reevaluating your tax structure. When I started my business, it was formed as an LLC. But when my business income grew above $100,000, I switched to an S Corp, and this saved me thousands in self-employment tax. So how you structure matters. LLCs are great, but S Corps are better when your business income increases. So make sure you talk to your tax professional about this one as well if your business consistently earns more than $50,000. Now let's talk about number 13, and that's using Section 179. When I bought new studio equipment, I used Section 179 to write it off in full that same year. It's perfect when your business makes big purchases that help you make more money. You can accelerate that depreciation and get a bigger tax write-off. Number 14 is tax loss harvesting. If you have investments that didn't do so well, you can actually sell them to offset your capital gains. I used this when I reshuffled my portfolio last year, and it helped balance out some of the wins. Make sure that you talk to your investment and tax professional about this one. Number 15 is investing in real estate. If you invest in real estate, you can take advantage of things called depreciation and interest deductions. If you have a short-term rental, like an Airbnb or a VRBO, you can do a cost segregation study and accelerate that depreciation, and it could save you a load on taxes. If you're talking to an aging parent about what they're going to do with the house that they own, make sure that you talk about 1031 exchanges so that you're not hit with a huge tax bill if you buy, sell, or transfer property. These are all things I highly encourage you to talk with your tax accountant or your tax strategist about if you are into real estate. Number 16 is using the QBI deduction. If you're a sole proprietorship, an LLC, or an S Corp, you may qualify for a 20% deduction on your business income. That's a huge savings. This is something that was created by the 2017 Tax Cuts and Jobs Act. My CPA helped me structure things in my business to qualify. Check with yours. Number 17 is planning estimated tax payments. Now, no one likes surprise tax bill, and making quarterly estimated payments based on your income can help you avoid penalties and stay ahead. So I usually schedule mine right after my quarterly reviews. Number 18 I love, and it's using the Augusta Rule. Here's one that not a lot of people talk about. If you own a business and you use your home to host your business meetings, you can rent your home to your business for up to 14 days a year and not pay any income tax on their rental income. The best part is it's also a tax deductible expense for your business. I use this for business retreats, business strategy sessions, for recording sessions. So just make sure that you document it with a rental agreement and pay fair market rates, but this is a great tax saving strategy. Number 19 is offering fringe benefits. So instead of giving yourself a raise, you can look at things like reimbursing education or covering health premiums or adding a retirement match to your contributions. These are tax efficient and they're highly rewarding. Okay, number 20, it's deducting your professional development. I invest heavily in growth. Conferences, courses, coaching, like we do at Mont Bell Circle. The best part, most, if not all of that, can be tax deductible. If it helps you grow professionally, it likely qualifies for tax savings. So friend, here's the bottom line. You work way too hard to give the IRS more than you have to. Tax planning isn't just about saving money. It's about stewarding what you earn, multiplying your wealth, and making smarter choices all year long. In the circle, we plan smart, we keep more, and we build wealth. And now you can too. So if this helped you, please let me know in the comment. What strategies do you use to reduce your tax bill? If you've got questions, drop them below and I'll comment back, and I'll even do a follow-up video soon. And before you go, please make sure you subscribe to the channel for more money, business, and life strategies to help you thrive as a mom boss. And don't forget, we post new videos every week, so don't miss out. I will see you next episode.